Hi, and welcome to our 5-minute tax update for November 2018. The aim of our tax update is to brief you on the most important tax developments in just 5 minutes. So let's set the countdown clock and start. We will first look at the most important local developments. A tax bill was recently submitted to Parliament by the Citizens Alliance Party, proposing the amendment of the income tax law so that the interest payable in respect of a loan which is granted for principal residence purposes and which is fully serviced is tax deductible. We understand that the purpose of the amendment is to provide incentives to the borrowers who are consistent with their loan repayments and at the same time to encourage borrowers whose loans are non-performing to start complying with the terms of their loans. It's an interesting initiative, so let's see if it picks up momentum at Parliament. Another tax bill which is currently under discussion and open for public consultation is a bill to revise the stamp duty law. We understand that the intention is to modernize the law having regard to the new ways of doing business and restrict it to just contracts, banking, insurance, and immovable property transactions. Unfortunately, from a first reading of the proposed law, it continues to use the same terms as those used in the early 1960s and continues to carry the same uncertainties as the current legislation. It is critical that if a new law on stamp duty is voted, it should not be a hurdle in business transactions. I'm sorry to say that the current version of the draft bill is far, far away from achieving this. Lastly, on the local developments, the Cyprus Tax Department has issued an announcement relating to the country-by-country reporting. The announcement clarifies that the constituent entities of Cyprus' ultimate parent entities will not be subject to local filing in their jurisdiction of tax residence, provided the multilateral competent authority agreement is activated between Cyprus and the other jurisdiction. Local filing is also not applicable for constituent entities in Cyprus with no Cyprus tax resident ultimate parent entities. Moving on to international developments, on the 15th of November, the OECD issued a press release announcing updates to the results of the preferential regime reviews of BEPS Inclusive Framework, which now covers 246 jurisdictions which have been reviewed for harmful tax practices. It was decided to reintroduce the application of the substantial activities requirement for no or only nominal tax jurisdictions. This effectively means that mobile business income cannot be parked to a zero tax jurisdiction without the core business functions having been undertaken by the same business entity or in the same location. It must be ensured that substantial activities are performed in respect of the same type of mobile business activities, regardless of whether they take place in a preferential regime or in a no or only nominal tax jurisdiction. We will close off today's tax update with a brief reminder of the upcoming deadlines. Just before we proceed, however, we would like to remind you that the taxation of benefits in kind mentioned in our previous webcast will apply from the 1st of January 2019. So you need to ensure that the various benefits are properly identified and calculated so as to start the deductions from the monthly payroll accordingly. Those of you that have not considered these provisions or need further assistance, please contact us for the diagnostic review. Going on our tax diary, today, the 30th of November, is the last day for the payment of the tax for 2017 by salaried individuals and individuals who do not prepare audited financial statements if their gross income exceeds €19,500 with no interest and penalties. This can be made only electronically through the JCC Smart website. Today is also the last day by which an individual can make a correction to the 2017 tax return without the imposition of the €100 penalty. As we will not have a tax update for December, we will look at the deadlines for the 31st of December. 31st of December is the deadline for filing a revised provisional tax return and paying the second installment of the 2018 provisional tax. It is also the deadline for the payment of SDC on rents, dividends, and interest from sources outside Cyprus for the last 6 months of 2018. By the 31st of December, insurance companies must pay their third installment of the premium tax for the last quarter of 2018. 31 of December is also the deadline for filing of all tax returns due to qualify for the relief scheme for overdue taxes. Finally, 31st of December is the deadline for filing the country-by-country reports for 2017 and the CBC notifications for 2018. This concludes our tax update for this month. Have a wonderful Christmas and a very happy New Year, and we will see you in 2019. Thank you for watching.